Okay, so from our previous video, we looked at Peloton, PTON, give you a very, very basic intro into TrendSpider. Now let's take a look back at our Discord channel. Someone did a chart request, so FCEL, FCEL, vaguely familiar with that. So let's take that ticker. So for TrendSpider, we want to type in FCEL, Fuel Cell Energy Inc. As you can see, I've never charted it before, but our indicators are on, so they're automatically going to show up depending on what what is clicked on to show. So let's go to our daily chart. Oh, I guess I did at some point chart this. Let me just remove all this markup. All right, so we're on the daily chart. Let's add this. I just created this my first watch list, so we're gonna click this little star here. Automatically added it. Let's go back to Piton. Let's see. We had our markup from our previous video. Back to FCEL. All right, fantastic. So let's just take a quick look back and see what has been going on with price. So we had a massive fall from May of 18 top. Let's put a trend line here because we see price was resisted by that level. And I'm just going to hide this real quick. Let's actually go, since we have some price discovery, let's go to the weekly. All right, fantastic. Now, wow, I don't know what's going on here, but all right, so let's start adding in our levels. So price came up here, this is all-time high. Really cool thing, you could label it all-time high. And let's bottom right is fine, click OK. So we need to change this because price is way below. We'll make this purple. And again, you guys figure out whether you're using TrendSpider, TradingView, Optima, find what works for you color-wise, style-wise. You'll play around with it if you're new, and you'll find what resonates with you. Don't get hung up on what everybody else does. Take what we do and adapt it to your style. All right, so here's another interesting thing. So we have all these time frames. We have weekly, monthly, daily. Well, here, let's look at monthly. This will be interesting. So this is the monthly chart. So you have weekly, daily, 4 hour, 2 hour, 90 minutes, 65, 1 hour, 45, 30, 15, 12, 10, 6, 5, 4, 3, 2, 1. I use, for general trend direction, I use the daily and the weekly. I go down to the 65-minute just to see a little bit more of what's going on price-wise. And for day trading, I'm generally at the 5, the 15, and the 30. And again, we'll go through that at another time. But let's go back to our weekly chart. I'm going to start adding levels in here. So I'm going to go all the way back, see where we are. All right, so we already added that. But I want this to not show up just on the weekly. I also want it to show up on the smaller time frame. So right now, by default, it's only on the weekly chart. But I can say I want it on the weekly, or I want it on all time frames, which means that it will be on the time frames below, but also above. But in this instance, let's just use original time frame and below. All right. So what that means is if I now go to the daily chart and I scrunch this all the way down. All right, well, I guess TrendSpider is making me look a little foolish here. All right, let's go back to the weekly and I'll show you real quick. So we're going to take a look at where price found resistance. Oh, wow. I didn't even see it went all the way back here. That is crazy. We won't go all the way that far. But let's start here. And we're going to do very basic, and then on the smaller time frames, we can go deep dive. Because right now we're really low price, and we're not going to 1885 anytime soon. So I'm going to use my shift and click drag method here. Pretty simple. And I don't know if you can see, but look at where price stopped here and then stopped here. Resisted, resisted, new resistance. So now let's go a little further back. Looks like another one right here. So and a lot of times there's more of a quote-unquote zone versus a very specific line. So another thing you can do is drag out, let's say, an area, right? So we can see from here to here is an area. I'm actually going to turn that line off. So that, you know, you don't have to use pinpoint precision, because with markets, you know, it's never exact. There's always room for price to be subjective, right? So it might be a range of $1 or 50 cents. It's not always going to be on that, but for this purposes, I'm going to just use my trend lines here. It's just a little easier to understand, but also understand that price can bounce around, you know, a little bit. It's never going to be an exact number. Anyway, let's keep going. So we have another price level here. Oops. All right. Make it larger. Another one right here. Larger again. Look at that, another range right here. And once you get the hang of this, it really becomes second nature. It's just been charting so long that it, you know, you just start seeing the trend. Look right here, it came down to here, bounced back up, broke down through, and look where price was rejected here. Because we came down when price fell, boom, a little bit of a bounce, right? A little bit of a bounce. And we break through, and then we came down, retested, rejected, rejected, come back down. But you could see the bounce actually, look, comes down here, and then we have a slightly smaller bounce. So you know what, I'm actually seeing a little bit of a cup and handle here. So let's take a quick look at that on the weekly. You see that? I'll draw it out for you really quick. Interesting. All right. So it looks like we've got a little bit. It's a really ugly cup. Let me redraw this cup real quick. Still getting used to this poly tool. Actually, let's do this. Let's make it straight. And do this. All right, that's not really working the way I like it. In any event, cup, handle, handle breakout. See the breakout here? Tested the rim of the cup. I'll take this off and I'll just show you real quick. This is actually... So we're going to want to see when price comes right here. Right? So right now we have our cup, we have our handle, we have the break of the handle. Now there are two things you could do with a cup and handle in terms of an entry point. You can buy the break out of the handle, which we have here, which was at 150, give or take, right? 153. Or we can buy the break of the rim, which is here. Just under $3. Let's move this up a little bit. You'll notice with trading, round numbers mean something. $1, $3, $5, $10. Round numbers are important. They are psychological resistance levels. So in any event, let's say price comes back up. We might test this, get rejected, test it, get rejected, and then boom, breakthrough, right? Where's price going to go? So with cup and handles, one thing you can do is measure where price potentially could go. And what we'll do is we'll take our percentage tool here. We'll find the base of the cup. We'll measure to the rim of the cup. And that is our measured move, right? 810%, which is kind of crazy. But when we break out, generally with a cup and handle, it will take the measurement, right? Boom. So this can give us an idea of where, that's just one indicator of where price potentially could go, $5.70. Will it happen in a week, 2 weeks? It could, or it could take 1 or 2 months. It all depends on the stock, if there's a news event that drives price. But in regards to technical analysis, this is generally what we're looking at. So what else can we do to look at this, right? So we see, this is the weekly. Let's go down to the daily. All right. This is a better sense of what's going on with price. Let's see our cup right here, our handle. Moving average is crossed over here. Again, I use the 8 and 21. Moving average is crossed over here. That actually could have been a buy signal for us right here. Moving average is crossed over here. Well, guess what? It could have been a buy signal. Where's the sell signal? If we know that for this particular stock, and we can go into this strategy tester, which is a really cool tool, we can back test this and see for FCEL on an 8 crossing over a 21 buy signal. How often is that better than just a buy and hold strategy? We can test those things. So anyway, we have a buy and we have a crossover right here. For me, that would have been a buy signal. Well, how do I know where to sell? Two ways. Where it crosses back under, or a little more aggressive, where price breaks down from the 8. Right, so you see how we shot up, we came right back down to the 8 EMA, and we held it. We closed over the 8 EMA every single day. Then we shot back up. So we knew that this was resistance right here. Well, no surprise, when price came back up, it tested that level and it closed underneath. So that's resistance. Came back down. For me, on this strategy, I would have sold right on the close of this day because we closed underneath the 8. Now look what happened. It continued to fall, but it found another level. And let's see if we can have previous history here. We sure do. See how price came up right there? So we're going to put another level there. And look, price bouncing between this level. So we could have understood that price, let's say we can't see any of this right here. We know, boom, we bounced right here, we broke through. We bounced right here, we came back and retested. We bounced to here, and then we broke down again. So we knew back at this time frame that this was our support, our support and our resistance, okay? That's going to be very beneficial when we get back here. So when we break through, we know right here, this is our good support level, right? We know this is our secondary support level. So good support, okay? Now let's say that this plays out. Well, do we know where price is going to go? Potentially. Well, look, fell right there. It fell right there. So now we're starting to understand how we can use support and resistance to understand where price can go, where it can find support, and where it can get rejected. So now let's say we bought our 8 EMA crossover here. We ride price up, and now we sell. Well, how much of a move was that? So we measure from here to here. Guess what? That's 272%. So this would be considered a swing, all right? Not a bad swing. You're entering at around 60 cents and you're getting out at around $2.31. Not bad. There are other things you need to understand in terms of how to gauge whether this is a good entry versus not. And we'll go into how we can use other indicators. Again, indicators are going to be lagging, but how we can use other indicators to determine what is going to happen. So let's say, again, we move in, we enter, now we exit. Well, where did we get back in? When the 8 crosses back over. So where does it cross back over? Right here. Well, then where do we get out? Again, where it crosses back under. So now this isn't as big of a move, but we have to understand with a massive run up, I'm probably not getting back in on the first bounce because I want to see where price is going to go and how it's going to react around our previous support levels. So we see that this is a previous support level. Where does it come? Price shoots up, comes back down, and hits our support level here. Hits it for a second time. So now we are, all right, we have some support here. So we continue up. Would I take this entry after a double bottom here? Maybe. But I would be more cautious with this massive run up. So it all depends on your risk tolerance. If you're newer, I wouldn't take this. If you have a more experience, you can use this as a scalp. So from this crossover on February 10th to this cross under on March 3rd, a couple of weeks, you could have done another 20%, not a bad scalp. However, you could also have used your exit here on this candle that broke this candle here that broke the 8 EMA and closed underneath. So now instead of exiting at 20% on the cross under, you're now exiting at 36%. 36% in 2 weeks, not bad, okay? So that's just another kind of method that you can use in terms of EMA crossovers. But let's take these off and talk a little bit more about support and resistance. So we broke through, we hit our resistance level, we broke back down. Looks like we came here. Now, would we have known price would come here? Let's take a look. Not necessarily. I mean, yeah, actually here, look. Price came and stopped here, moved back up, came down, stopped here, right? So this is a level right here. So let's put that there. And well, sure enough, look at that. So again, you have to go back in history to see where your support and resistance levels were to understand in the future where they potentially could go. So just by using support and resistance, you don't even need to use any other indicator. You're understanding where price potentially can go. So again, we hit resistance, break down, we retest another level, we retest it, we break out, we hit another resistance, we break down, we come back down to support. What happens? We bounce, we come back, we break through resistance again, and boom, we hit it 1, 2, 3 times. This is a tough level. You can use the thickness of the line. So let's say we know that that's really a strong level that we need to be able to break through, make it thicker. That'll give you a good indicator of, okay, when I come back to this, it's a thick line. That means the resistance is really strong here. So notice how we hit it once, we came down a little. We hit it twice, we came down a little more. We hit it a third time, we came down even more. So what's happening? Very tough resistance level. Price is getting rejected, pushing us down further. Price is getting rejected, pushing us down further. And so you're starting to understand now how support and resistance works, and how not all support and resistance are equal. Some are stronger, some are weaker. But we can tell by how price bounces off those levels how strong they are. So we know right now that this 287 level is going to be a tough level once we revisit it. Let's move forward. Sometimes this gets stuck. Here we go. All right, so now bringing us to the last couple of weeks. So we got rejected, we came down, we got rejected again, we came down more. Now we're coming back up. Well, sure enough, look at where we got rejected. So now we can't even get past this level, let alone this level, right? So this is not good. This is showing it's showing a little bit of weakness. So we're going to take our diagonal resistance line. We're going to come from the high point. And when you're drawing out resistance lines, you want 3 lines to touch. 2, you can anticipate that third touch. But here. So if we were to draw it out here, right, you're only touching 1, 2. This is not touching, right? So we need to bring it down. And now we have 3. 1, 2, 3. Okay, so now this is our trend line that we need to get over. And what I would say is I wouldn't be touching this price because we're getting a lower high, a lower high. So ideally, to be in a uptrend, you want higher highs. So if we take that off and dive down a little deeper, we can see, all right, well, we came down. Here's one channel. We broke through that downtrend, right? So now we're going back up. So where's our support? Well, we have our horizontal support levels, but we also can have a trend line support level. So remember, 3 touches. We really only have, let's say 1, 2, 3, even though we had a little bit of a purge here. So we can anticipate that price next week might come down and retest this level right here. If it holds, it's going to come back and test this level. Maybe it gets rejected again, come back, test this level, and then test, and maybe we break through. Well, what will happen when we break through? We're going to test this level. What I will say about FCEL, this is our key level here, this 287 level. If we can break that level, that's our entry point. All right, and I mean, you know, there's other things we can do with this. We can add Fibonacci to understand our fib levels. So on the daily chart, let's look at our previous swing high to low. So maybe we can start, we can do our auto fib, very easy. I like to kind of draw my own fib tools, or my own fib lines using the fib tool. So we came up to here, and then we came back down. Let me clean these up just to show you. I'll turn off the noise and use Fibonacci. So we had our high here, and we had our low right here, right? I mean, it's just unbelievable how Fibonacci works. Look at how it came right down to this 382 level. Came right down to this 382, right down to the 382. The half, the 0.618. So when you understand where to draw your fib lines from swing high to swing low, it will tell you where price could potentially go. So look, we tried to retrace to this 382 level. It got rejected. We came back to the 382 level. This April 22 candle. Look, we closed underneath. April 23rd, we broke through. We went to the 618. We broke through. We broke back down. What do? We tested the next fib level, 0.5. We broke down. Tested the next fib level, 382. So we want to make sure we're holding this fib level here. If we break down this fib level here, very possible we come right back down here. If we hold it, we can retest the 0.5, the 0.618, 0.786, and then the previous swing high. All right, so that's how you can use fib and support and resistance levels to understand where price is and where price potentially can go.